Yeah, hi, good morning. Hello, Lekon. Hello? If you're speaking, I can't hear you. Hi, Ore, can you hear me? Hello, Lekon, if you can hear me, you're not speaking.
All right. Lekon, you can go. Can you go live on YouTube now, please?
No, I think the next video. Yes. So.
I'm already live on YouTube. I sent you.
Yeah, right. Hello, can you hear me?
I sent you the link.
Whose network is bad? Hey, Lekon. I hope your network is not bad, though. This thing is cracking. Oh.
Hello, Ore.
Hello, Lekon. What's up?
Yeah.
Ìfẹ́ máa fojú mi sọ́nà. Wọ́n lérí wọ́n péjọ, ọ̀rọ̀ mi ló fi ṣèké. Ìfẹ́ máa fojú mi sọ́nà. Wọ́n lérí wọ́n rò pé. Carry my love, wọ́n lérí wọ́n péjọ, ọ̀rọ̀ mi ló fi ṣèké. Ìfẹ́ máa fojú mi sọ́nà. I had to run away and hide. Something happened in the middle of the night. I came inside without a sound. Suddenly my life was turning upside down. All that I could feel was pain, and strangers came and took my soul away. Like a deadly hurricane, I know my life will never be the same. Where do you go when you're by yourself? Who comes along when you cry for help? I know I can't change the past, but as the river keeps flowing, I'll keep on moving on. I'm hoping for a better life, praying that nobody's story turns out like mine. The only thing I know is fear, even those with good intentions disappear. All that I could feel was pain, and strangers came and took my soul away. Like a deadly hurricane, I know my life will never be the same. Where do you go when you're by yourself? Who comes along when you cry for help? I know I can't change the past, but as the river keeps flowing, I'll keep on moving on. Where do you go when you're by yourself? Who comes along when you cry for help? I know I can't change the past, but as the river keeps flowing, I'll keep on moving on. It has been done. My spirit is broken. You gave me no reason. You left me with questions. Where do you go when you're by yourself? Who comes along when you cry for help? I know I can't change the past, but as the river, I keep on going on. Where do you go when you're by yourself? Who comes along when you cry for help? I know I can't change the past, but as the river keeps flowing, I'll keep on moving on. Where do you go when you're by yourself? Who comes along when you cry for help? I know I can't change the past, but as the river keeps flowing, I'll keep on moving on. Hey, ooh, I'll keep on moving I'll keep on moving on. I'll keep on moving on. Ojúmọ́ ti mọ́, ojúmọ́ ti mọ́ mi nílẹ̀ yìí o. Ojúmọ́ ti mọ́, mo ríre o. ojúmọ́ ti mọ́ mi nílẹ̀ yìí o. Ojúmọ́ ti mọ́ mo ríre o. Àdàbà tí ń fò lókè lókè wá balẹ̀ mi o. Ojúmọ́ ti mọ́ mo ríre o. Ojúmọ́ ti mọ́ mi nílẹ̀ yìí o. Ojúmọ́ ti mọ́ mo ríre o. Ojúmọ́ ti mọ́ mi nílẹ̀ yìí o. Ojúmọ́ ti mọ́ mo ríre o. Oh yeah, àdàbà tí ń fò lókè 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 wá balẹ̀ mi o. Ojúmọ́ ti mọ́ mo ríre o. Oh yeah, àdàbà tí ń fò wá balẹ̀ mi o. Ojúmọ́ ti mọ́ mo ríre o. Ojúmọ́ ti mọ́ mo ríre o. Oh, 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 yeah. Àdàbà tí ń fò wá balẹ̀ mi o. Ojúmọ́ ti mọ́ mo ríre o. Ojúmọ́ ti mọ́ mo ríre o. the other day. I was talking to the weatherman about today. I know all he could say was no one knows tomorrow. See, I can read the weather child. I can tell me be the river for the sunshine. Well, that's as far as my guess goes. Cause no one knows tomorrow. No one knows tomorrow. Time it wasn't need to go to war. All the kidding just to settle someone else's score. But the victory isn't even sure. No one knows tomorrow. So we can study history and philosophy and places ideology. But tomorrow's still a mystery. No one knows tomorrow. No one knows tomorrow. No one knows tomorrow. No one knows tomorrow is your opportunity to fail or be successful if you please. Yes, indeed, tomorrow is a politician's today. Is the victim of decisions and the future of our children. So when I die someday, will I be in heavenly places singing hallelujah with an angel on the piano? Or will I be just another contribution to the earth, the trees, the grasses, as tomorrow slowly passes? No one knows. 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 So when I die someday, will I be in heavenly places singing hallelujah with an angel on the piano? Or will I be just another contribution to the earth, the trees, the grasses, as the miles slowly passes? No one knows. No one knows. No one knows.
Hello, Liko, can you hear me?
There is fire
Liko.
on the mountain, and nobody
Sorry.
seems to be on the
Hello?
run.
Okay.
Oh, there is fire
Oh.
on the mountain top, and no one is running. I wake
Okay,
up
hi.
in the morning, tell you what I see on my TV screen. I see the blood of an innocent child,
Everything is
and
ready, right?
everybody's watching. Now I'm looking out my window, and what do I see? I see an army of a soldier man marching across the street. Hey, hey, Mr. Soldier Man, tomorrow is the day you go to war. Boy, you are fighting for another man's cause, and you don't even know him. Ooh, what did it say to make you so blind to your conscience and reason? Could it be love for your country, or for the gun you use in killing? So other. So you buy her a diamond that someone has died. Oh, don't you think there's something wrong with this? Tell me, who's responsible for what we teach our children? Is it the internet or the stars on television? Why, oh, why? Why, oh, why, oh? Oh, so little Lucy turned 16. And like the movie she's been seeing, she has a lover in her daddy. She can't tell nobody till she makes the evening news. For there is fire on the mountain and there is nobody. Oh, there is fire on the mountain top and no one is surrounding. Oh yes. One day the river will overflow and there'll be nowhere for us to go, and we will run, run, wishing we had put out the fire. Oh Lord, for there is fire on the mountain, yeah, yeah, and there is nobody, nobody. Oh, there is fire on the mountain and no one is running. So yeah, yeah, yeah. There is fire, fire in Africa, oh, fire everywhere in the sea, yeah, in the air, totally. No one is surrounding. Fire, 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 yeah, yeah. Nobody is surrounding. Peace for the people who are gone. Yekba for the ones not yet born. Oh, for the people who are yeah, 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 yeah. For the people, peace for the people who are gone. Yekba for the ones not yet born. Whoa, for the people who are yeah, 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 yeah. For the people, I cry when I see that I am born. I live when I see what I have to do. Cause life is all about all you sitting and looking at me. Just take one step at a time. Cause if you jump, you will never believe the thorns of life that my wanting and waiting for me and you. They make it but I say, I want to run away. Run away, run away, run away. Where did Jassy go? Run away, run away, run away. Where did Jassy go? Peace for the people who are gone. Yeah, for the ones not yet born. Whoa, for the people who are yeah, 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 yeah. For the people, I cry when I see that I am born. I live when I see what I have to do. Cause life is all about all you sitting and looking at me. Just take one step at a time. Cause if you jump, you will never believe the thorns of life. Am I wanting and waiting for me and you? They make it better say, I want to run away. Run away, run away, run away. Where did Jassy go? Run away, run away, run away. Where did Jassy go? Mother, mother, feel like I'm floating through existence. I feel like I'm living after time. I feel like I'm forced to break the silence. Is that a crime? Is that a crime? I feel like we're all following shadows, and shadows that don't know where to go. I feel like I'm waiting for tomorrow, while today wastes away. It's not that I don't know, it's not that I can't see, it's not like I haven't noticed, it's driving me insane. It's not that I don't know, it's not that I can see, it's just the way I feel, it's just the way I feel. I feel like a child without a father, and mama tries, oh Lord knows mama tries. I feel like the world is on my shoulder. I wonder why, wonder why. I feel like I'm not the only one who's frustrated. I feel like something's going wrong, I can't escape it. I feel that the destinies of those are meant to be the best are in the hands of liars. Now the world is on fire. It's not that I don't know, it's not that I can see, it's not like I haven't noticed, it's driving me insane. It's not that I don't know, it's not that I can see, it's just the way I feel, it's just the way I feel. I feel like we're not angry enough, that while we wait, time's ticking away. I feel there's gonna be an explosion. It's not that I don't know, it's not that I can't see, it's not like I haven't noticed, it's driving me insane. It's not that I don't know, it's not that I can see, it's just the way I feel, it's just the way I feel. Tell me, girl, ain't that cool? To see a man you love and start to act a fool. Tell me what's a girl love supposed to do? Tonight I'm breaking mama's rule. Baby, there's a lot of things I want to say. I'm in love with you, it's driving me insane. I know I'm sounding stupid, but is it okay to be a woman every day? Ooh, you'll be my man, and I will be a woman every day. Ooh, you'll be my man, and I will be a woman every day. Yeah, oh, oh, oh. Hey, yeah, baby, can we take a walk around the park? I can cook you dinner, it won't be so bad. We can laugh and talk about the friends you've had and all the ones that make me mad. Ooh, baby, baby, can we stay up all night? We can argue, we can even start a fight, and I can laugh and say I love the way you smile, and everything will be just fine. Ooh, you'll be my man, and I will be a woman every day. Ooh, you'll be my man, and I will be a woman every day. Hey, oh, whoa, whoa. Hi, yeah, preacher man, please have some faith. I've come to you 'cause I lost my way. Here I am with my bag of shame. Where are you? Where can I find you? What's if money, I wouldn't help the needy. The pain just need to move me. What am I? Who have I become? I'm reaching out, I need you now. Come ease this pain, I need you now. I'm down on my knees, I'm ready to change. Save me, Lord, I'm feeling low. I need you now, I need you, yeah. I need you every day. I need you now, I need you, yeah. I need you everywhere. I need you now, I need you, yeah. I need you every day. I need you now, I need you, yeah. I need you everywhere. La 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 la. La 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 la. I need you now, I need you, yeah. I need you every day. I need you now, I need you, yeah. I need you everywhere. I need you now, I need you, yeah. I need you every day. I need you now, I need you, yeah. I need you everywhere. Yeah, yeah. I need you now. I need you now. Ooh, I need you now. I need you now. I need you now. Láti bá mi tẹ́lẹ̀. Bí o bá fẹ́ àbí o bá kọ̀yé, òun láti bá mi tẹ́lẹ̀ bá mi. Akinyele wants to marry wife. He don't wanna pay some bright price. You better find it. Akinyele ọmọ Jinadu. He don't wanna pay some bright price. You better find it. Akinyele, 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 Akinyele. Oh, don't tell me, Romeo. Wá bá mi délé, bá mi. Say be the same thing, ló sọ fún mi lánàá. But today, wá tẹ̀lé mi mọ́lé. Lawyer, alágídí, first class liar. Alákọ̀rí sanwó kó tó jọbẹ̀. Ìyá mi ló bí mi, bàbá mi ló tọ́ mi. Mo kì í ṣọmọ rẹ́gísítírì, alákọ̀wé lọ́yà. Akínyẹlé o, Akínyẹlé o, Akínyẹlé, Akínyẹlé, Akínyẹlé o, Akínyẹlé o, Akínyẹlé o, Akínyẹlé. Lawyer, alágídí, first class liar, alákọ̀rí sanwó. Kó máa mumu, kó máa jẹun, kó máa ṣọmọ lọ́mọ. Akínyẹlé o, Akínyẹlé o, Akínyẹlé, Akínyẹlé, oh, Akínyẹlé o, Akínyẹlé o, Akínyẹlé o, Akínyẹlé, Akínyẹlé, Akínyẹlé o, Akínyẹlé, Akínyẹlé, Akínyẹlé o, Akínyẹlé o, Akínyẹlé. Oh, every day. Every day's not a holiday. My life's like a subway. Oh, I know this love don't last. Look at me, tell me what you see. Do you believe this love is real? Oh, I know this love don't last. I've come from far away to see these go down the drain. I waited patiently, and this is what I get. Emotional, feeling me. The whole wide world is giving in. I'm not so free to express myself. The woman in me, whoa, don't feel no way. My mama said, baby, be careful. If anybody come to say I love you, oh, 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 oh. My wish I could have been more for you. As I watch you leave, I cannot believe. So it's come to this. All my friends to laugh, 'cause I want you back with me. My baby's gone, gone, gone. My baby's gone from me. Have you seen my baby for me? My baby's gone, gone, gone. My baby's gone from me. Have you seen my baby for me? I feel just like a fool to let you walk away. I wish I held you closer and not push you away. I didn't understand you. I thought your love was strange. I wish I kissed you deeper. Can we find a way? A way? My baby's gone, gone, gone. My baby's gone from me. Have you seen my baby from me? My baby's gone, gone, gone. My baby's gone from me. Have you seen my baby for me? Can I say I'm sorry? Can I say I'm sorry? Can I say I'm sorry? Will the change? Oh, my baby's gone. It's gone from me. It's gone from me. My baby's gone. Have you seen my baby? Oh, my baby's gone, gone, gone. My baby's gone from me. Have you seen my baby from me? My baby's gone, gone, gone. My baby's gone from me. Have you seen my baby for me? Beautiful is your name. Wonderful is what you are to me. It's you I see in my dreams every day, and I pray for you, queen of my life. You are so beautiful, mama. You're beautiful. Emi wa mama kan. Talori yeah. Mama mi ò rojú rí. That is why I'm loving you. Nítorí ọmọ ó jìyà ilé ọkọ. Mama mi ò rojú rí. That is why I'm loving you. La 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 la. Oh, you're beautiful. Oh, you're beautiful. Oh yeah, la 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 la. Oh, you're beautiful. Oh, you're beautiful. Ẹ bá mi kíra fún màmá mi. Òrìṣà bí ìyá o, kò sí láyé. Ẹ bá mi kíra fún màmá mi. Òrìṣà bí ìyá o, kò sí láyé. Oh yeah, la 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 la. Oh, you're beautiful. Oh yeah, la 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 la. Oh, you're beautiful. Whoa, woman, there is no one like you. Oh, woman, there is no one like you. Nítorí ọmọ ó jìyà nílé ọkọ. Màmá mi ò rojú rí. And that is why I'm loving you. Nítorí ọmọ ó jìyà nílé ọkọ. Màmá mi ò rojú rí. And that is why I'm loving you. La 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 la. Oh, you're beautiful. Oh, you're beautiful. Oh yeah, la 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 la. Oh, you're beautiful. Oh, you're beautiful. Ẹ bá mi kíra fún màmá mi. Òrìṣà bí ìyá o, kò sí láyé. Ẹ bá mi kíra fún màmá mi. Òrìṣà bí ìyá o, kò sí láyé. Oh yeah, la 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 la. That's why you're beautiful. Oh yeah, la 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 la. You're a beauty, and that's why I'm loving you. Yeah, you're a beauty, and that's why I'm loving you. Yeah, the water, hey, yeah, the water. Oh, I need to get you. Can you do this for me? Whisper a prayer. Something's happening. I'm so scared. What I waited so long for is finally here. Why does it feel so wrong? Why the tears? I always give love. Never thought I'd deserve to be the one to get love. Oh no. So I locked my heart away. Thought I didn't need it anyway. Maybe some things aren't meant to be. Over mountains, over seas, where I thought no man could reach. How did you find me? How did love find me? I was trying to live without any water, was trying to breathe without any air, was losing the fight, and now I realize that I wasn't even alive. So I locked my heart away, thought I didn't need it anyway. Now I know differently. Over mountains, over seas, where I thought no man could reach. Love, you have found me. My love, you have found me. You found me. You found me. I'm so glad. Didn't need it anyway. Now I know. Auntie, don't pele itosi, oh wale yi, ati ojo meta dabo. Oh wípé o lóyún fún ọ, oyún oṣù méjì, o lóyún fún ọ. Àní wípé o lóyún fún ọ, ìwọ náà o lóyún fún ọ. Wáídì ọmọ Ṣẹ̀kínà, ọmọ Muyínà, ọmọ Muhammad. Wáídì ọmọ Ṣẹ̀kínà, ọmọ Muyínà, ọmọ Muhammad. Àǹtí tó lóyún fún ọ, ó tóbi ọlọ́mọ. Ìwọ náà. Àǹtí tó lóyún fún ọ, àní ó tóbi ọlọ́mọ. Ìwọ náà. dúdú ọmọ pupa báwo ló ṣe rí Wáídì ọmọ Ṣẹ̀kínà ọmọ Múyìnà ọmọ Wáídì ọmọ Ṣẹ̀kínà ọmọ Múyìnà ọmọ Muhammad. Wáídì ọmọ Múyìnà ni ọmọ Ṣẹ̀kínà ó fojú mi rí màbo nílé màbo lóko màbo lẹ́kọ̀ọ́ màmá tóbi má rẹ̀ ní màmá mi èmi náà bí tèmi táwọn lọ fọmọ tán ẹ̀ má kò tilẹ̀ bá mi. Àbọ̀rọ̀ tàṣà ọmọlúwàbí bó wá dénú rẹ̀ á tó díndín. Have you ever heard of a dreamer girl living in a world so far away? You might think that she is a bit naive when she says that someday she'll be your queen. Is it impossible? Is it a crime? Or is it just a silly state of mind? Baby, close your eyes, let your dream. Maybe someday, one day. I dream of simple things every day. I dream the love will come my way. I dream of many lights across the stage. I dream that in this world I can make a change. Is it impossible? Is it a crime? Or is it just a silly state of mind? Baby, close your eyes, let your dream. Maybe someday, one day. Tell me that I could have it all. Tell me that I wouldn't change at all. Tell me this road is not too long. Will I give up a few years from now? Will I be strong some way, somehow? Tell me that I should keep holding on. Baby, see you as you leave. I feel it, I see it as you leave. When we kiss. Tra la la. Think when by me we of us in the business me. Emi recollect be o kasaji mi be money. O pong pong mama loju. All I know boy nípa business mi. Ọ̀rọ̀ emi recollect ni. Ẹ̀gbọ́n rẹ̀ ń fẹ́ mi ni. Ẹ̀gbọ́n rẹ̀ tó ń fẹ́ mi lọ́wọ́ ni o. Mo ti yà fún o. Ẹ̀gbọ́n rẹ̀ ha. Ẹ bá mi sọ fún bèbí yẹn tó wọlé yẹn. Ẹ bá ń kìlọ̀ fún. Ẹ kìlọ̀ fún yá. Ẹ bá mi sọ fún sísí yẹn tó kájú gé. Ẹ bá ń kìlọ̀ fún. Ẹ kìlọ̀ fún yá. Think baby me feel. Oh, I like see more, yeah. baby ẹ kò fò sókè kórìí ní kórìí ló fà á. Ẹ bá ń kìlọ̀ fún, ẹ sọ̀rọ̀ fún yá. Tell me how many women childhood dreams come to pass. Tell me how many movies turn out real. There are so many questions, questions I would like to ask, so you can understand exactly how I feel. Tell me how many people wish they were someone else, someone that thinks the world wants them to be. Tell me how many babies will be born just to die, leaving me with these questions, asking why. Tell me how the trees whisper, how the birds learn to sing, and how does the rainbow stay the same?
trendybeats.com.
What am I say?
Butterflies in my tummy when the money enter me, I like it.
getting rich and it's all in the plan. My mind made it to Forbes. I buy jama for my baby, mo touch mommy, mo turale. Soft living like a superstar. All I do is winning till no more loss. See my day, job me call. I feel like what's the rush? Can I waiting this up? Me not see no evil and I fear no one. I do the sign of the cross. But you the me don't be done. Since I know this same on God.
Welcome. I'm just gonna keep calling names of people in the room already. Thank you for being an early starter. Thank you for coming super early. Excited to have you. Welcome. Welcome Itunu. Welcome Einstein. Welcome Raphael. Welcome Gania. Welcome Daniel. Welcome Olarewaju. Welcome. So if you want to share our link, you can also share it on YouTube. You can also share the YouTube link. Check our social media pages and your emails. You'll see the YouTube link, so you can share that. Share that as many people as possible. Let's have this webinar. Let everyone be in. Welcome. Welcome. We're just going to give 5 minutes. Things are to run and everybody's come in, and we'll start. Start at 11:05 on the dot. If you're excited to be here today, please put some emojis in the chat section. I want to know who's in the room, who's excited to be here, who's excited to learn about money and investment and all that good stuff. If you're excited, yes, I see some people. There's some people that are going to win prizes today. Oh, this laughing, so excited. Who's as excited as me? Can see I'm just smiling. Who else is excited? Okay, Daniel, I see you. Adewale. All right. Let's keep it coming. Let's keep the emojis coming. Let's keep it coming. Ayomikpo, I see you. Let's keep it coming. Yes, Babs. Okay. All right. So we're going to start on this great note. It's usually great if you're going to learn, if you want to be learning, you want to boost up your emotions. You want to make sure that you're charged so that your learning is really great, right? So let's just keep this energy up. I want you to open your mind, right? About things and be ready to ask questions. Have your pen and paper beside you, right? Don't be sleeping. You can cook and listen, but still listen very actively, right? Listen very actively. You can do the audio version of writing things down. If you're driving, if you're at work, then you can definitely write and learn. But I want you to make sure that you take something out of this webinar today, right? So we're welcoming you first of all to the FSDH Investment Week. Yay for Investment Week! Some chats, give us some excited high fives in the chat section for Investment Week, right? For Investment Week, yes, I see you, Silver. I see you. All right. So we welcome you to the investment week. And of course, this week is championed by FSDH Asset Management. If you've never heard of it before, you click the link, you're here. So we're introducing ourselves to you. We're FSDH Asset Management, right? A wholly owned subsidiary of FSDH Group, right? But we're FSDH Asset Management. And of course, we're very, very, very big on investments, right? We want to help you to get to that point where you take investment extremely seriously, right? Is the unsaid secret that all the successful people know, right? That you need to take your investment seriously, even as hard and tough as the times are. You need to ensure that you're taking the topic, everything around it, extremely seriously. So I'm going to give you a tiny bit of statistics just to kind of set your mind for the tone of today, right? First of all, the average age of people who invest generally is at around the age of 33. Now, that's because most people think that, you know what, I'm too young to start investing, or maybe I've not gathered enough money, I'm not big, I've not blown, so why should I be talking about investments? Well, let me just tell you, you're not too young to invest. You're never too young to invest, right? And never too old either to invest, because you could be investing for your children and their children's children, right? The Bible even says you be wise to do that, right? Okay, we also have 56% of experienced investors are actually just looking for short-term gains. Short-term gains. So most times when people are investing, they do not think about the long run. They don't think about the long term. That's another thing to ruminate on. What does that signify for us, right? Also, 82% of young investors say they are looking for investment advice. So actually, people don't know a lot about investment. What is this investment thing? It just seems so tough and dramatic. Maybe it's for older people. So let me wait till I'm old enough and I have enough money, right? 29% of Gen Zs have a retirement fund. I don't know whether that is good or bad, right? Because some people would say that's a good number for what we're thinking. I mean, if there are not a lot of young investors, and then 29% of them are already thinking about their retirement, that's pretty good. But then it's also still a small number, because yeah, you should be thinking about your retirement from the moment you start working, right? So these are just a few things I wanted you to thinking about as we go into this webinar, just to know that this is an advantage for you. And if you take this on the longer run, make sure that you take every opportunity to learn about investment. And so I'm officially welcoming you to the FSDH Asset Management Investment Week, and then the FSD Asset Management Investment Webinar. And I hope you have so much fun. I hope you learn a lot and you take something that you're going to actually act on in the next space of things. So yeah, awesome. So now I'm going to be bringing to you a very important voice, or we're inviting someone important, right? He's my leader. He's a seasoned investor, someone who already has the knowledge and the know-how to take us on this journey. He's just going to do a gentle introduction of us and of this day, and just take a few minutes to listen to him. So I'm going to be inviting Mr. Toyin Owolabi, the CEO FSDH Asset Management, to give us his introduction remarks. Thank you.
All right. Can you hear me?
Yes, we can.
Okay, great. Thank you very much. All right, thank you for that warm introduction. So I'll just go straight ahead. I think I will start with all protocols observed. I'd like to also appreciate Mr. Razak Ahmed, who's here, and everybody else. So thank you very much for making this a date. Right. So without much ado, without much ado, I would just start. So, ladies and gentlemen, welcome to today's webinar focused on the transformative topic of leveraging the rise of digital investment platforms. And we're gathered to explore the immense opportunities that these platforms present for collaboration, for innovation, and for market growth. Digital investment platforms have reshaped the financial arena, democratizing access to investment opportunities and opening doors for both seasoned investors and newcomers. This virtual gathering marks a unique moment where financial institutions and fintech disruptors can unite. And with their strengths, we can work together to create a financial landscape that's more inclusive and efficient than ever. Our time together, we're going to delve into the potential collaborations that may elevate the financial sector. We can establish financial institutions, bring wealth of experience, regulatory knowledge, and client relationships, while agile fintech startups contribute innovation, technology prowess, and fresh perspective to investment. Together, these partnerships have the power to reshape the industry and offer investors a broader array of products and services. With digital platforms, financial institutions can diversify their offerings, presenting clients with a wide range of investment options. These platforms also provide a fertile ground for development of new products that cater to various risk profiles and investment goals. As a result, investors can customize their portfolios in alignment with their unique aspirations and risk tolerances. Furthermore, the rise of digital investment platforms contributes to the deepening of financial markets. The increased engagement from retail investors coupled with data-driven insights enhances market liquidity and efficiency. This virtuous cycle not only attracts more participants, but also fosters an environment where innovation and growth flourish. As we engage in this webinar, let's reflect on the significance of collaboration and adaptation in the rapidly evolving landscape. The digital era demands that we collectively embrace change. We harness technology and collaborate to drive our financial systems forward. Through open dialogue, shared knowledge, mutual respect, we can harness the potential of digital investment platforms to shape a more inclusive and robust financial future. So I would like to welcome everybody once again, and thank you for joining us for this dynamic discussion. I'm excited to witness what is likely to come out of this seminar. So thank you very much for joining. Thank you.
Thank you so much. Thank you so much, sir. Thank you for that warm introduction. Thank you so much. I think I maybe didn't talk about the theme of today, which is leveraging digital platforms, right? Using investments. Investments in this space where the rise of digital platforms exist, right? So how do we leverage them? So I'm sure you heard what our CEO said. I'm trying to set that up, but before we start, I would just like us to take. I just feel like everybody's just chilling a bit. So just shake your body, just get a bit excited with me, right? So we're going to take a poll. We're going to take a poll just to kind of get the feel of the room to see how you're thinking about investments. And our pool is perfect. What I mean by perfect is it's 7 exact questions, and 7 is the number of perfection. So a poll is going to come up on your screen right now. Please take it as quickly as possible, and let's see where we're at. Let's see where we're at as a team, as people in the room. Has everybody taken the poll? You can keep taking it. You can keep taking it. You can keep taking it. All right. All right. Are we all done? Has everybody taken the poll? Is there anybody that hasn't taken the poll? Okay, keep going. Let's keep going. I see some people are still taking it. I see some people are still taking it. Go ahead. All right. We'll give us one. Okay. 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 So we're going to end the poll in 5, 4, 3, 2, 1. And we're ending the poll. All right. All right. Awesome. Awesome. So I just want everyone to kind of see a feel of the type of investors we are in the room, right? So I'm going to share the results, right? I don't know if you can see it. Can someone identify if you can see the results of this poll? We can see it. All right, awesome. So as we can see, about 81%, and I feel like, we're not lying, but we're just saying what we want us to say, because if we are leaning towards moderate moderate risk investors, we're probably risk averse, right? But let's just say about 81% of us are able to take moderate risk that does not cover my money, risk that does not leave my money stranded. Anything that is not going to scatter my money, my funds, and then I'm able to take it. So moderate risk and then risk averse. All right. So would you pay for investment advice? A lot of people said yes, a lot of people said maybe. I don't mind for you to put in the chat box why you chose maybe. So you're not sure if the advice is strong enough, if the advice is good, if they give me a good taster, then maybe I'll pay for investment advice. If that's the reason, you can put it in the chat box. We want to know. All right. So which of these investments have you tried? Okay. So we have a good number who have tried mutual funds, right? Real estate. Okay. Stocks and equities. We'll say about 19%. Cryptocurrency, not a lot of people. Okay. All of the above. Wow. Some importers, exporters in this room. Awesome. Okay. We have 36% of that. And then none of the above, we have 6%. That's a good number. All right. Let's move on. So on a scale of 1 to 5, how investment savvy are you, both knowledge and action wise? Right. We see a bunch of people saying 3. So like a good way, moderate again. Okay. So not bad. Not bad at all. So if you have, and this is a scenario question, right? If you have 1 million naira and only a 60-day window, right? And to redeem your investment. So to invest and redeem. So you have only a 60-day window, right? What type of investment will be most ideal? So this is to really know if you understand investment that much. So ideal, so meaning the best case scenario, not a lot of commercial papers, and 60 days and at 1 million naira. So that will not be the most ideal. For stocks and equities, depends if you're probably getting that in some kind of mutual fund, but not that won't work as well for the ideal. So mutual funds will be the most ideal. So we see that 42% of people actually choose this, which is not bad. So we have a moderate amount of investment interested people. So are you familiar with digital investment apps? We have a lot of yeses. So it's 6% of us are like that. And then do you presently have any investment app on your phone? We have 72%, but we still have a good 28% without apps on their phones. Awesome. Awesome. So it just kind of to give us context of where we are. We can say as Nigerians, we can say as, people attending an investment webinar, right? So just to give us a context on how we think about investment and whether we do think about it at all. But I think our goal today is to really ensure that you're thinking about it. And that's why we have a guest speaker here today. To take us on that journey, to make sure that we are thinking about it. And we're thinking about it the way it's happening right now, which is through investment platforms, right? So without much ado, I'm going to invite our guest speaker for today. Sorry, give me a moment. Okay, so our guest speaker for today is none other than Mr. Razak Ahmed. He is the co-founder and CEO of Cowrywise, a leading digital savings and investment platform, right? Cowrywise aims to make savings worthwhile for everyone, making it simple to save and invest, right? He graduated first class in economics, so he knows the math, right, from Abafemi Awolowo University, and he's also a CFA charter holder, as he holds the Professional Association of Chartered Financial Analysts certificate. He is certified as an energy risk professional and a global association of risk professionals. In the past, he has held positions on Shell Nigeria, Vetiva, and Meristem Securities. His area of expertise covers investment management, equities, corporate finance, economics, valuation. Valuation and financial modeling, valuation, risk management, and of course, digital investments, right? He's a consummate professional with a personal story of resilience that actually inspires great respect. So please, with lots of emojis in the chats, please let's make welcome our keynote speaker for today, Mr. Razak Ahmed. Please, emojis in the chats. He's not going to start until we have those emojis in the chat. I want make some noise. You can't make it out loud, but make it in the chat. If I don't have like 20 emojis, I'm not taking it down. He's not going to start. He's not going to unmute. Yes. Yes, let's give him a warm welcome. We're very excited to have him here. Yes, I see that. I see you, Muji. I see you, Silver. I see you. All right. Thank you so much. Sir, you can unmute your mic and you are welcome.
Yeah, thank you, Aurelua. Can you hear me clearly?
Yes, I can hear you very clearly.
Awesome. By the way, the background music was awesome. I wish you didn't stop it. That was quite on brand, right? Wealth management and Asha, the class. That was a good one. Well done. Yeah, it's my pleasure to be here, actually. Good morning, everyone. And my expectation is that at the end of this session, we should at least pick one or two things that will be of benefit to everyone, including myself, because we're here to share ideas and to rub minds together. So I think the program is structured into two sections. So I will be spending the next 10 minutes just to set the background with few slides. And then we go into the panel discussions to delve deeper into the topic of the day, right? So just bear with me for the next 10 minutes just to set the background, and then we can keep going. So I'll be sharing my screen. Just give me 1 second. If you can see my screen, please let me know. Can you see my screen?
Yes, we can. Yes.
Okay, awesome.
Yes,
awesome.
and you're sharing it. Yeah.
Yeah, so I did a bit of a tweak to the topic, even though the same substance. And 1 second. Yeah. So we'll be looking at the intersection of finance, tech, and technology in today's world, which basically speaks to how digital investment platforms have evolved over the years and how consumers are finding those platforms quite interesting. So I will talk largely about the mega trends that are driving this behavioral change that we're seeing and how key platforms are keying into those behavioral changes to ensure that consumer needs are met. Because at the end of the day, it's about consumer needs and it's about the products that are developed to meet those needs. And interestingly, needs, as we all know, change over time from one generation to the other. What consumers really want and need change. But the underlying asset may be the same. The approach for serving different customers at different times actually changes. So we'll delve into how the intersection of finance and technology has evolved, especially in today's digital world. So the first part is to highlight the key things, the key mega trends that we'll be touching on. And the first might not sound like a technology-inclined trend, but it is, and I'll be proving that in the next few minutes. So the first is demography. We'll be speaking on how demography is a major driver of the changes we're seeing when it comes to technology adoption, and more importantly, the evolution of wealth management along technology lines. The second is digital, which speaks to how our lives generally have gone digital. And this is not just in Nigeria, this is a global phenomenon. And we'll be looking at how every single part of our daily lives has actually been consumed by digital experiences. And then the third is the connectedness that currently exists globally, how the whole world is getting smaller and smaller. And the third one here is actually a trend that has just started, and we haven't seen a bit of it, despite the fact that significant changes have happened, right? So we'll be looking at how these three factors are fueling the adoption of digital investment platform, not just in Nigeria, but also across the world. So the first part, the first driver is demography. And what we'll be talking about here is specifically the demography of Nigeria. 1 second. Something is not. So I'll be speaking with here largely will be the demography of Nigeria and how the unique nature of this demography is actually fueling technology adoption and changing consumer behaviors. If you look at the simple graph that is shown here, it shows the demographic structure and evolution from 1950 to year 2021. And one thing is striking, that the percentage of people above 65 years old is pretty small. And that percentage is just about 3%. And the bulk of the population is actually less than 64. More interesting is if you go down the age brackets, you see that the bulk of this population is largely made up of people below 40 to a very large extent. While the population is not something that can change instantly, it is something that requires multiple generations to change, which means that we are stuck with this demographic structure for the next couple of years, if not for the next couple of decades. We've seen instances where demography has changed for a particular country, like what was observed in China or Japan, for example, where you continuously have older people in the demographic structure. But to a very large extent, it takes time before demographic structure can change because it is linked to culture, it is linked to beliefs, sometimes it is linked to people's faith. right? So it's a very difficult thing to change, even though we've seen instances where government policies have been used to change the course of demographic structure. But in the case of Nigeria here, we have a very young population. You mentioned earlier that the average average age for an average investor is about 32, 33 years. Yeah,
Yes.
that is looking at the entire investment universe. All right. But for certain investment platforms that are digitally oriented, the age bracket is actually much lower than that. And that speaks to the demographic structure of the country, that a lot of people are young. Now, how does this fit into technology? The point is, the world has gone significantly digital. And interestingly, what the young people grow up with is a digital world. For a good number of people that are above 50 or above 40, mostly the first time they had experience with a phone or a laptop will be probably in their late teens or early 20s. I mean, for those who are above 40, because the proliferation of digital devices actually started in the 90s, right? But interestingly, for the young people who are in their, say, 30s now or 20s, they started using digital devices right from birth, right from the time they are 2, 3, 4, 5 years. And that culture becomes something that has grown with them. That behavior becomes something that has grown with them. And so we should expect even more behavioral changes going forward, given that we have significant number of Nigerians who are under 14, who are under 5. And the level of competence this population cohort has shown when it comes to handling digital devices is actually extremely high. It's the highest we've seen in the world. And this is not just in Nigeria, but across the world, which means that the changes we've seen in the past 10, 15 years in terms of digital adoption is most likely just a tip of the iceberg. So we'll be seeing significant changes going forward. So this demographic structure, particularly referencing Nigerian peculiar nature, which is also something that is replicable across most African countries, is that we'll be seeing a lot of young people leaning more towards digital means of life than we've seen in the past. So this is a trend that is difficult to stop. It is a trend that will continue, and it's a trend that will change a lot of things in Nigeria and the world over. So this is one key mega trend that no one can stop. Is the only thing you can do is just to ensure that you key into the opportunities that come with that. And I'll be linking this with some other mega trends as we move forward. The second mega trend is the implication of having a very young and tech-savvy population, right? And that simply means that everything from buying foods to transportation to laundry to name it, even getting, a plumber, ordering foods, ordering anything, groceries, everything has gone digital. So basically, life as we've known it has gone digital. And those things might not be as, the implication of those kind of experiences might not be as pronounced if you're not watching closely, but they combine to create enormous change in the way people live their lives, right? And I'll be giving an example of this, especially within the Nigerian context. And as I mentioned, this is not just peculiar to Nigeria, it is something that is universal. It is happening across the world. In most emerging markets, you have digital lives of people changing significantly. So this is an example of what has happened in Nigeria, just so we can contextualize the scale of this trend. There are so many variables we can use to show how people's lives have gone digital. But a case in point here is payments in Nigeria, like electronic payments, how people have adopted electronic payment over the past past 7-8 years, for example. And this is actually quite interesting to me because it shows the trend at work. So digital payment in Nigeria as a case study. And what I mean by digital payment here is simply all payment activities that go through electronic channels captured by Nigeria Interbank Settlement System, NIBSS. There are so many other variables you can use, like the number of phones, the number of smartphones, internet connectivities, and so on and so forth. But this is a good indicator to show how people's behavior has changed in the past 7-8 years. So let's look at the chart to the right, for example. It shows the number of electronic transactions on annual basis in Nigeria. In 2014, that number was less than 100 million. 100 million unique transactions and about 90 million unique transactions happened in 2014 in Nigeria. And this was just less than like 9 years ago or 7 years ago, eight years ago on the average. But in 2021, the annual transaction volume, electronic transaction volume, has grown to 4.4 billion. 4.4 billion annually from just 90 million. So if you want to contextualize this thing to understand what is really happening, is to look at it that on annual basis, about 150 or like 250,000 unique transactions happen daily in 2014. But in 2021, the unique transactions have grown to about 12-13 million from just 250,000. What this simply means is that we're seeing a lot of people adopting electronic payments channels as against the traditional cash transactions or manual transactions. Why this may look like an isolated case, it is not, because people are actually making electronic payments for certain services, right? Of course, we have instances where people give people money, like they dash people money. But the driver of this transaction is because there are a lot of economic activities that are going online, that are going digital, and payments are being embedded into those digital experiences to ensure that people can make payments. And what that simply means is the compounding growth that we've seen in digital payments. But that is not all. An interesting thing we can also, glean from here is that most of this transaction volume is actually driven by young people, young adults, age 15 to 45. So these are the set of people that adopt digital behavior much more than the older generation, right? Now imagine the level of adoption that we will see for those who are less than 15 years old in the next 5, 10, 15 years, for example, from now. It will be huge. So take, for example, this number state that about 12 million unique transactions happen on daily basis in Nigeria. And that number gets to 24 million, for example. Can that number get to 50 million, for example, on daily basis? What will be the payment landscape if that number gets to 50 million, right? Which is very possible because of the number of people we have, because of the volume of economic activities, especially if the economy is doing really well, which we all hope for. It means that there will be huge growth in economic activities. And as long as payments have been growing digitally in terms of the channel, it means that we'll be seeing significant adoption here. That's number one insight. The second insight is that about 80% of these transactions are actually initiated using mobile phones. And that is one important arsenal that millions of people have right now to execute their digital life experiences. And for digital investment platform as well, that is what everyone is leveraging on, right? Instead of having multiple branches, and this, this touches not just the banks, this touches not just wealth management companies or the banks alone, but everybody. Instead of leveraging on brick and mortar infrastructure, you're actually leveraging on the digital devices that people have in their palms. And what that simply means is that you can reach out to people at every point in time, 24/7, 365 days a year. 80% of those are from mobile phone. So for the digital investment platform, it is like the entire population using mobile phone has actually helped to invest in the infrastructure needed to reach out to them. Originally, if you want to reach out to, say, if you want to reach 36 states in Nigeria, let's assume a world where there was no mobile phone. It means you need to set up a physical infrastructure in each of the locations, right? And when you do that, customers will not directly pay part of the setup cost for that infrastructure. The company will have to do that, even though the expectation is that down the line, the company can recoup that capital. But today, that investment has been made by millions of people by buying digital devices. And all you have to do is to find your way to people's digital devices. And you are there with them on a personal basis because they can have access to you 24/7, 365 days a year. But another insight here, which is quite interesting, is that the average transaction value for electronic transactions in Nigeria has dropped from 380,000 in 2014 to just about 70,000 in 2021. Well, we all like something, we all like growth, right? Why this might look like there is a decline, it's actually an important, it's an important benefit. And what this simply shows is that a lot more people in the low income brackets are using electronic transactions right now compared to 2014. Well, in 2014, it means an average person who carries out an electronic transaction was transferring 380,000, almost was moving 380,000 naira. But in 2021, that average transaction has fallen to just about 70,000. And if you look at this, it makes electronic transaction more inclusive, especially when you consider the average wealth, average income, the income per capita of an average Nigerian. So what this simply means is that we're seeing adoption of electronic payments by a lot more people within the lower income bracket. So it is not necessarily a bad thing that the average transaction has dropped. It means that people now use electronic transaction for every single transaction or for most transactions that they perform on a daily basis, which is a good one. And the expectation is that as more people adopt electronic channel, this average transaction will fall. And that is what will likely push the average transaction volume on a daily basis to about 40, 50 million in the next couple of years. So this is an important case study to show how deep digital has gone in our daily lives. So these transactions include people paying using POS, using their cards, people ordering Uber, people buying stuff on Jumia or Konga, people making transfers just because they bought something from someone who has a store on Instagram, people making payment for their investment on Carrywise, people transferring money just because they want to move from Lagos to Abuja to an airline. So it's a whole gamut of economic activities. And underneath this is the adoption of digital in expressing people's demand and supply. And this is extremely, extremely important as a major mega trend that is shaping the adoption of digital channels when it comes to wealth management. Now to wrap this up with how this links to investment management is this. For digital investment to work, one key thing that needs to be solved is payments. Because for digital investment platforms to work, you don't expect people to make payments via cash to a very large extent. Because you want to reach out to as many people as possible, the method of payment has to be electronic, has to be digital. So with digital payments being the primary growth elements in our payment ecosystem, it means that more people will show less bias against using digital investment platform because they are used to electronic payments anyways. So it's a driver, right, to a very large extent. And this is very key. As long as payment gets solved, electronic payment gets solved, it can move money from Mr. A to Mr. B. It provides the necessary platform for you to structure investment management on top of that, because payment has to happen. Customer has to move money to the asset or wealth manager, and the wealth manager has to move money back to the customer. So if there is a payment trail that is universally acceptable by all parties, it makes the problem of wealth management's digital way, it makes the problem of adopting that less difficult. So this is very key. So this is just one example. We can cite multiple examples of how our lives have changed dramatically. Even though sometimes we might just come to realize, might just live life like nothing has changed. But sometimes when you compare how life was 10 years ago and how life is today, you can see how dramatic the difference is, really, as shown by this graph, for example, right? It doesn't mean that in 2014, people were not living lives. They were living lives, people were enjoying. But the point is, the way people live lives today is dramatically different from the way people were living lives 8, 9 years ago. And that speaks volume when it comes to how people then want to invest in today's world. This data is from Nigeria Interbank Settlement System, by the way. Then the last item here is about global connectedness. This is an evolving trend, and it is also very difficult to stop. And in fact, what we have seen is that this trend is likely to be the most potent when it comes to digital wealth management in the world. Wealth management is a very regulated industry with the regulators, putting in place stringent requirements in order to ensure that the market integrity is protected, and to also ensure that consumers or customers or clients or retail investors' interests are well protected. And frankly speaking, it is necessary, and it is not peculiar to Nigeria alone, it's everywhere in the world. Banking is also a very heavily regulated industry, anything that has to do with money. But what the global connectedness has helped to unlock is a new paradigm when it comes to some key areas. The list here is not exhaustive, by the way, but these are just the key elements that are shaping how digital investment platforms have been adopted. So the first is capital mobility. Because the world is more globally connected today, there is some element of capital mobility. And please don't limit this to how scarce FX is in Nigeria today. I'm speaking globally. We've seen instances where of course, capital has moved dramatically to innovations in Nigeria and across the world. In Asia, in Latin America, in Europe, capital is moving pretty much faster than it used to move. And what this does is basically that capital moves to ensure innovations are funded across borders, right? Capital can move from the US to Nigeria to fund innovation in Nigeria. Capital can move from the US to Asia to fund innovation in Asia, and that, and so much more. And we've seen that in terms of the billions of dollars that have moved to startups in Nigeria and in some other African countries. What it simply means is that people are being given the financial firepower they need to experiment, financial firepower that they need to create innovation that can meet people's need, right? If you have significant number of the population being young and they are demanding for digital experiences for different services, be it in mobility, be it in wealth management, be it in banking, be it in healthcare, it means that capital will find its way to fund the innovations that are being developed to meet those peculiar needs, right? And that is what we've seen. So the digital investment platforms are just one of the beneficiaries of this capital mobility that is happening across the world. And it will continue, really, because it looks like capital is abundant, even though there is a temporary pause, but global capital is actually it is at historic peak, let me put it that way. But there is a temporary pause, but that will be resolved shortly. Then the second one is increasing access to global assets. In many countries, like in Egypt and, well, to a large extent in Nigeria, there is some form of restrictions when it comes to giving the retail market access to global securities, for example. And to a large extent, you see mostly HNIs or corporates who have access to that. But the interconnectedness that is happening in the world today is actually making it a lot easier for individuals to have increasing access to global assets. And by global assets, I mean assets from the US, from Europe, from Asia, from Latin America. And this is an important trend because it improves the asset class universe that an average person can have access to. And the advantages that comes with diversification, for example, can now extend more to retail investors beyond just to beyond it being restricted to just HNIs and corporate institutional investors. This is a major thing that is happening in terms of mega trend. Then the third part is evolving regulatory environment. Why this is not exactly like a destination, I think the regulators are beginning to have discussions, at least discussions, around what is happening globally in terms of different asset classes, in terms of what is happening to enable retail investors have access to different global assets. That discussion definitely is geared towards ensuring that there is a robust regulatory framework that can enable the protection of the capital markets and retail investors at large. At least there is a regulatory discussion around that. And that regulatory environment will continuously evolve because at best, regulators are better off. They are better off having regulatory framework in place to regulate these entities rather than outrightly ban them, at least from experiences that we've seen in some more developed countries. Then we now have the last item here, which is data and information flow. And this is quite interesting because as simple as it sounds, it is one of the key factors shaping retail investors' behavior when it comes to the formation of their demands and the type of asset they want to invest in. For example, you have some of the biggest wealth managers in the world in the US and Europe, and some in Asia. And people have access to the product these companies offer because of access to internet, access to smartphone. You can easily see what BlackRock is offering, for example. You can easily see what Blackstone is offering. Then the question you keep asking yourself, why seated in Nigeria, is that why can't I have access to this type of products, for example, right? So people's taste has gone beyond the local provision of what is available. Individual tastes have gone global. People want to experience what a Wealthfront, for example, is offering to Americans. They want to experience it in Nigeria. If Nigerian wealth managers are not making that product available, then they'll be looking at the possibility of, becoming Wealthfront customers or Wealthfront clients. But of course, there are some regulatory restrictions to that. So the demand and behavioral changes that are happening is actually partly influenced by people's exposure to what is available elsewhere in the world. Before information flow becomes easily done, it is somewhat difficult for you to actually understand what is happening inside BlackRock or Vanguard, and so on and so forth. But today, people have the information on their fingertips, and that is influencing what they demand. So if an American can buy an Apple stock or can invest in a global portfolio, why shouldn't a Nigeria have that? Of course, an average local investor or retail investor doesn't care about whether there is a regulatory restrictions to that. What they'll be asking themselves is, why can't they challenge the status quo to ensure that I can have the same kind of access that an American has to invest in Apple? After all, they use the Apple products quite well in Nigeria. They use iPhone, they use MacBook. So why can't I invest in the stock of that company? And that is just a very simple example There are more complicated ones like that. All I'm saying basically is that the data and information flow that exists today helps to shape consumers' tastes and behavior, and asset managers need to rise to that occasion because the demand for an average retail investor that is armed with smartphone and internet is actually benchmarked against global provision or global standards. So as a wealth manager in Nigeria, in Africa, we need to operate at that level by ensuring that we provide the best for users. Now, the combination of these three things, young demography, which is extremely tech savvy, and the increasing growth we've seen in technology adoption and the diffusion of that technology, more importantly, because technology is now a lot cheaper than it used to be. For example, for most of what we've built at Carrywise in terms of the technology base, it will have been extremely difficult for us to do without spending billions 10, 15 years ago. And that is primarily because technology has become a lot cheaper today. And it is continuously getting cheaper by the years. And that has fueled adoption. Then global connectedness as well, layered on younger demography who are extremely vast at using technology, has helped to change consumer behavior completely. And for example, I remember during I think as early as 2010, 2008, 2009, 2010, 11, most stockbrokers in Nigeria used to have like mandates received on papers, like your customer will call the broker, they okay, I want to buy GT Bank stock, I want to buy, and then brokers will go into the trading room and start punching those mandates on paper and so on and so forth. And we can see what has happened between then and now. Right now, you don't even need a broker, at least in human form. The broker is your hub. And all you have to do is just place the mandate right there. You don't need to call anyone, except for exceptional cases, of course, maybe institutional. But for retail investor, you don't need to do that. That bridge has been built between the market and the retail investor, which means a middleman is being taken out of the equation. And we'll continue to see that continuously across different products within the wealth management industry. So it will be extremely difficult for an average retail investor in Nigeria, for example, to have a broker midway in order to serve that customer. But of course, financial advice is a different conversation. But on a regular daily transactional activities, you can easily do that leveraging technology platform, right? Changing consumer expectations are another set of things that are happening, right? And when I mean consumer, what I mean by changing consumer expectation is that an average retail investor demands the best from industry players, demands the best from the company they interact with. And that is because, one, they have access to similar services from across the world. They have access to services that are also leveraging technology for delivery. So they've experienced Amazon, for example. They've experienced the superb customer service that Amazon has. They've experienced the efficiency of Amazon, and everything happens on the phone or on the laptop. So when they want to patronize you as a local asset manager or local transportation company, they expect similar level of competence, similar level of efficiency, right? So there is no separation in terms of expectations. So what they expect from Amazon is what they're expecting from the local guys. And that expectation is something that most companies might find extremely difficult to meet, but that is the expectation of the consumers. And companies that are able to meet these expectations perfectly, raise their local standards to global standards, are exactly the set of companies that will remain at play in the next, in the future. Then the last part is approaches have to change. Approaches to wealth management have to change. And this is primarily because now we have so many touch points, so many digital touch points that can help improve the quality of advice, the quality of portfolio management, that wealth managers, provide to customers. Traditionally, if you want to advise a customer on portfolio construction, for example, it will be that you get some information about the customer, the liquidity need, their risk appetite, and so on and so forth. But because people's lives are now digital, you now have richer information base to inform the kind of decision you make on behalf of the customer. Because basically you can create a persona, you can create the personality of that customer from the customer's digital footprints. We didn't have that before. And that is an extremely important step, which means that as a wealth manager, in order to improve the quality of service provided to customers, especially customers who have huge digital footprints, one needs to leverage the digital economy, the digital lifestyle of those customers to ensure that your service provision is actually superb. And this leads me to the last part, which is that the future of wealth management is undeniably digital. Undeniably digital. But again, is digital where the money is today? I would say probably not yet, but is digital where the money will be? I can say confidently, yes. Because young people who are digital savvy, who are tech savvy, may not have the economic power yet compared to, say, the older generation or the older population. But that economic shift is happening. And it's just a matter of a generation or two for it to be fully formed. And that is where I see the wealth management industry heading towards. So this provides like a general context to what the question and answer session will look like. I hope I haven't spent more than 10 minutes.
All right. Thank you so much. Thank you so much, sir. That was very insightful. I was writing things down, left, right, and center. And I love how you set it up perfectly, to tell us that the future is digital, but not right now. Not right now. The future is not completely digital yet. Or the present, because they say the future is now the present, right? There's no more leaders of tomorrow, it's now leaders of today. So all of it is not completely online yet. And so finding that balance, that connectivity, that legacy is moving to the digital space, and the digital space finding the regulatory or the a bit constrained aspect that the legacies have. That's what we're going to talk about today. So that's why we're going to, this connectivity that has happened between digital and legacy, we're going to bring it up on a panel session, and that panel session is what we're going into now. We've spent a bit more time than we planned to, so we're going to make it a bit shorter in terms of the panel session, right? But yes, I'm not going to be moderating this panel session. We have Said Kolapo, our head of product development. He is going to be moderating this session. Yes, asking the right questions at the right time. I just hope that everybody has been writing things down. I'm going to be asking questions after this, right, to make sure that we're learning how to invest in this new space of things as the world is going right now. So I'm going to pass the baton on to Said Kolapo. Thank you so much for agreeing to do this. And we're going to have a panel session with Mr. Toy and Mr. Razak. All right.
Thank you very much. Thank you so much, Razak, for that insightful presentation. Mic check, just a quick one.
Mic is definitely check,
Awesome. Thank you. Right. So I'll just dive right into it, right? You agree with me that with the rapid evolution of technology and such of fintech innovations, right? The realm of finance and investment are definitely undergoing changes daily. And we cannot overemphasize the combo you brought today to the panel, having Razak from the digital side, and of course, having Toyi coming from, being a legacy player in the industry, right? So without much ado, I'll dive right into it. And my first question, will go to Razak, right? And I'm actually I'm not trying to pitch you, I guess, Toyin, but you know, the digital age. So I just want you, right, just highlight.
I'm not even sure I can do that.
Yeah, absolutely. So I want you to just highlight for our listeners, right, what specific advantages do the digital investment platform offer to investors compared to traditional method of investing? I know you highlighted a bit in your presentation, but we just want to reiterate at that point now.
Okay. So I think I will approach that from two dimensions. The first is that there are a lot of similarities, right? Because for the fact that we have a lot of digital investment platforms today doesn't mean we didn't have stocks in the past, or we didn't have fixed income in the past. So the underlying assets are largely the same, right? You have stocks in the digital investment platform, and you have stocks. Mutual fund is mutual fund anywhere. Stocks are stocks anywhere. Fixed income anywhere. The only thing you can say is that probably in recent times, we are seeing the development of what looks like a new asset class, depending on who you ask, like say crypto, right? But again, it's still a subject of regulatory scrutiny, whether you can adequately classify crypto as a new asset class or not. But if you take out crypto from the equation, largely the underlying assets are the same. What is different is the channel of delivery and the experiences that customers have. So from a macro standpoint, what's the one major advantage that digital investment platform provides is inclusion, right? Because you're leveraging technology to serve people, you have the opportunity to reach out to millions of people. You have the opportunity to scale significantly without necessarily increasing your head counts if you are to use the legacy approach, right? So that is one. So that inclusion is extremely important because it defines the kind of economic prosperity that an average person has access to, right? If a good number of people today had access to investing as early as when they were in their 20s or in their 20s, for example, they will have benefited a lot from time and compounding effects on their investments. So that's early access to investing is what digital investment platform provides. It increased the overall market size. Instead of having just 1 million people, you can have 10 million people who can have access to investment. So the market size increases, and by so doing, economic opportunity increases for everyone. That is the first one. Then the second part is that expectedly, digital investment platforms should provide cost-effective means of serving customers, right? You should be able to serve customers at lower cost points, largely because you can scale easily, largely because you can reach out to millions of people and bring down your average cost of service, right? But that may not be what is obtainable in the early years, especially when you are building. So the cost might be relatively high, but as you scale, that economies of scale will definitely, trickle down to your cost of service. And that's the second one. Then the third is convenience to a very large extent, like having your product or your company available to you 24/7, 365 days a year is awesome experience. Compared to, this is Saturday, we are not opening. This is Sunday, we are not opening. Then you have to wait until Monday before you get your product serviced. So that's one major advantage. Then, for example, in the case of CarryWise, like 50% of our inbounds when it comes to customer inquiries are handled automatically, right? And we have additional 50% be handled by humans. And we have to build that into our operation because of the number of customers that we serve. Compared to a traditional asset manager, for example, we'll have a lot of customers, right? But that doesn't mean the average customer of CarryWise will have a higher AUM than average customer of, say, an FSDH. An average FSDH customer is multiple times richer than an average CarryWise customer. So that is understandable. So you can have like few humans or few customer service professionals serving few people when you do not have millions or thousands of hundreds of thousands of customers. But when you have that, there is no way you can leverage humans to continuously serve hundreds of thousands of millions of people. You need to leverage technology to do that. So that convenience is there, speed is there, cost effectiveness is there. And frankly, that inclusion, I think, is something that is extremely underrated. Having millions of people included in the process of investing, I think is an economic opportunity that an average person will appreciate in the next 10, 20, 30 years.
Thank you. Thank you very much for that. I hear inclusion, I hear channel of entry, but most importantly, we also have similar or the same asset class in all this, right? So we're practically selling the same thing, but while creating convenience, right? Thank you very much for that. And I'll move to Toyin, right? So now I'll place it to you saying, due to the digital revolution, there has been a surge in digital investment platform, no doubt, right? How have legacy fund managers like FSDH Asset Management adapted to this changing landscape to remain competitive?
Yeah, so thank you very much, Said, and thank you for Razak for that exposition. It was really nice, nice of you. Thank you very much, Said. So first, let's just establish what the platform is. Basically, it's a place where there is opportunity for interaction. There's where people can exchange, currencies, monies, whatever it is. It's just that a place, where we can call it a marketplace and the rest of them. And there has always been platforms. I mean, platforms have existed forever. We're talking about the stock exchange. We're talking about the different areas where people can interact. But the difference is that with the digital transformation, what has happened is that platform has become totally revolutionized in the sense that platform now exists in a way where, it creates efficiencies, better efficiencies and reach, right? Just like Razak had said, I mean, you can sit down here and be doing, executing a transaction in Lagos, whereas you are in some place in Jos or Ekiti or Port Harcourt, or so that reach is there. So the digital transformation has helped to do that. And basically, the things that we are doing as legacy fund managers basically is to say, look, these exist, right? So based on our goals, the different goals that we have, and the strengths that we have as legacy fund managers. So especially those that have branches, those ones can decide, okay, you know what, we can decide to float our own digital platform, and pursue, we have sufficient customers and we have an avenue to reach those customers by ourselves. So when we go digital, we actually serve more customers, our reach is better. And then, we already have the strength. So one way is for them to actually grow, invest in their own digital, that is, we legacy fund managers now, invest in our own our own digital platform and grow organically, right? So, and then another way is for us to partner. So what many people do is to partner. So you find a worthy partner in the fintech space, digital investment space, and then you work together based on your culture, your outlook, right? And then the third one is collaboration and agreements. Generally where you can say, look, hey, based on the fact that we find products that are complementary, right? So as a fintech or as a digital platform, digital investment outfit, you may not be doing FX. For instance, you may not have a license to do FX, and you can work together with. So basically, those are the two different ways that legacy fund managers have been able to continue to survive. One, like I said, just to recap, is they grow, they establish their own platform, digital presence, and grow organically by leveraging their network to achieve scale. The another one is to find a partner who's doing well, who has maybe some challenge in terms of maybe financing the technology, and then you provide financing, and then you both work together. But there must be some level of mutual understanding and respect. And then, of course, collaboration in a situation where the market is so big, like we have today, there is 40% of Nigerians who are not inclusive, financially inclusive, that is. So the market is still big. So we can create a larger market, and then bake a larger cake, so to speak. And then that gives everybody an opportunity to increase depth of the market. And of course, product offerings can begin to come out. I think when Razak was talking about the reach to the customers, and then, you can actually begin to develop products to fit personas that hitherto the legacy fund managers did not have in their portfolios. So I believe that that pretty much does justice to that. Thank you.
Thank you very much, Tony. What I hear you say basically is the legacy are still maintaining the exclusive touch while using technology to enhance this delivery of services. Also, you talk about collaborating with the digital guys, just also everything boils down to giving the customer that perfect treatment or the exclusive touch Absolutely. They are known with. Thank you. Right, circling back to you, Razak, I know you made mention of crypto as some new asset class we're seeing as upsurge of technology in the financial landscape, right? So I'm saying as like a leader in the digital space, are we to expect more of this digital alternative asset class vis-a-vis our traditional asset class? And do you think there's possibility of these alternate digital classes surpassing the traditional asset classes we have already?
I think yes, but there will be the need to have regulatory clarity on that. What is currently happening is engagements with regulators to better understand these new asset classes. And before you can scale this to a meaningful number of people, definitely there has to be regulatory backing. There has to be regulatory acceptance. But what is continuously becoming the reality of the world is that these digital assets class, like crypto, they are beginning to have other use cases that may eventually make them part of our daily lives going forward, right? For example, leveraging blockchain for identity, for example, leveraging blockchain for ownership, like you can leverage it for ownership in real estate. And there are a few companies that are already, exploring that frontier today, right? It might just take a while, but they are becoming part and parcel of what we need to live with on a daily basis. But interestingly, we also have instances where we have bad actors who have leveraged people's interest or people's interest, to commit, all sorts of atrocities just to get their money carted away. We've seen that, and that is usually what happens when a major technology is in the early stages. But the most important thing is to have that regular handshake between the regulators and the players when it comes to making this new asset class available to the retail markets. But interestingly, it is something we are interested in, because if the market is saying this is what we want, then I think for players, their responsibility is to assess what the customers need and then combine that with what is regulatorily allowed and find a solid balance that can enable you operate within the regulatory environment without going against the law, while at the same time meeting the needs of the customers. And I think that a lot of things will happen within that space in the next few years.
Yeah, I quite agree with you. Thank you very much for that. And also taking up from where Tony left, something particular to me was when you spoke about collaboration between the legacy asset managers and the digital one, right? And it makes me want to ask, in an era of associated bias, how do you see the collaboration between legacy asset management firms and fintech companies in delivering a more comprehensive and enhanced investment experience? How do we tackle that bias to show that we're playing in the same space, we want the same goal ultimately? So how do we handle that associated bias?
Is that for me?
No, that's actually for Mr. Tony.
Okay.
Okay, I looked, it appears that your connection, or is it mine, it's a little bit faulty. It's unstable, so to speak. But can you hear me?
Yeah, I can hear you.
All right, so I believe you mentioned associative bias, and how we can relate with that to in the spirit of collaboration. I think this associative bias is something that has been for quite. I mean, I think the advertising companies are the best to who actually use that and make it clear to us. I remember growing up. There was an advert in the 1970s, Muhammad Ali and Maltex. I began to drink Maltex believing that it would make me look like Muhammad Ali. And, and then, there's this other one of also Joy Soap. There's a lot of ladies who started buying Joy Soap because they thought it would make them look like that lady who did the advert. Right. So basically those biases, when you say that, the top quality fintech is partnering with another with a well-recognized legacy outfit, in terms of fund management. There's this bias that just works that look, they must be the same quality, they must be the same standard, they must, and I believe that tapping into that bias also helps to deepen the market. And I think as a legacy financial fund manager, basically we as FSDH especially, asset management, we tend to look at those companies with which we have kind of a similar mindset, to help, because with that similar mindset, you won't get into trouble with the associative bias, right? So basically, it's to take advantage. Sometimes you find out that your products kind of increase the product offering to customers, right? But the foundation is that like mind, similar culture, and everything that helps. And then once you can identify that, you can leverage that bias to deepen the market, to offer more products, and also, to put those products on the technology platform to reach more people. And then serve, take advantage of both sides of the world, your technology side as well as the side that is offering existing products that are of top quality, and you find out that the benefit is immense. And with that, you can continue to mine data together to develop products jointly that will serve that market and develop future opportunities, or develop future products. So basically, I believe that this bias can be more positive than negative, and because negative can have its horrible effects on the market. I think Raza also mentioned for some people who are taking advantage of the blockchain and the rest of them to read customers of their monies. So it's important that you have that culture and mindset that works together. And at least once you identify that, the potential is immense and the possibilities are limitless. Yeah.
Thank you very much for that, Toyi. That speaks to what I was expecting. And to go back to you, Razak, earlier when we were describing the digital landscape, you made mention something to do about security, people having their investment carted away, right? And you agree with me, this has been some kind of bottleneck approach when it comes to legacy investors embracing the digital side. They're concerned about security. How do I talk to a machine? Am I sure what I have there, it is what it says it is, right? And there's been a lot of, often concern with regulatory and security when it comes to digital investment ecosystem, right? So as a founder in this space, how do you advise the industry to address these challenges of investor trust and compliance?
Yeah, okay. So I think there are a few things worthy of considerations here. The first is digital worth it? Is it worth it in the first place, right? I think the categorical answer to that is yes, it is worth it, right? Will it come with some risk given the digital footprint that an average person currently has today? Definitely. The risk surface area has ballooned to a very large extent, ranging from, compromise of identity to compromise of, security details of the person when it comes to a particular investment platform. So there'll be bad actors, no doubt, but again, the benefits significantly outweighs that negative. So in order to forestall that from happening in terms of its growth, I think both industry players and regulators have a major role to play. The first will be that for regulators, there is no difference in terms of what should be regulated generally, but what needs to be looked at the regulatory, when regulatory oversights are being performed, is what is different between a digital asset management, for example, a digital asset management platform and a legacy asset manager. I'm sure if there is a provision in the circle that a wealth manager must have a custodian, for example. It doesn't matter if you're a digital assets manager or you're a legacy, custodian has to be there. You must show that you have a custodian. The customers' fund are seated with a custodian. So that's clear. And there has to be some level of system audit as well from the regulatory standpoint, right? I think the regulators also need to look at the channel of service. If your channel of service is primarily digital, it means you're leveraging digital more, then there has to be a way for a third party to check or audit that system to be sure that things actually work the way they work. Because we've seen instances where system designs might be faulty and what you claim you're doing might be completely different from the experiences that customers go through, right? So system audits has to be there, but also it is the responsibility of the industry players to ensure that before the regulatory oversight is performed, you have adequate system checks in place from external audit standpoint, you conducting your own personal system audit to ensure that things actually work the way they should work. And this comes with time and experience as well. There is no way you will start and then expect a perfect system, right? But over time, as the experiences gather, as you gain more experiences from user using the product, you begin to build a very solid and error-free and risk-free platform. But there is also the part to educate customers on how to interact with these platforms. Some people, for example, I'll say they are carefree when it comes to handling of their digital access rights to the platform. Let me put it that way. It means that if you lose your phone today, can someone easily have access to your banking app, to your investment app, just because of the way you've stored the information, access information on that app? Some people practically store PIN, bank PIN on their contact lists. And if you lose your phone, how easy can, a bad actor have access to investment platforms? So there is a part to have some level of education, not just financial, but some level of education on how to use this product. And that primarily rests on the industry players to do that. So you have to educate your customers continuously, making sure that you protect them, protect their money, and reduce the risk surface area for them as you grow. So the responsibility is on both ends, both regulators and industry players.
I hear you, Razak, I hear you. So while the digital asset manager is the first line of defense, we cannot completely exonerate the user to say the honors of protecting yourself while using these digital channels is also on you as a person. And, that was insightful. I can imagine the damage.
Just to add to that, I think there's this conflict between security and convenience. So as you try to protect the customers, you're actually creating some inconvenience. But as you try to be extremely convenient to the customer, you'll be creating some loopholes. So one needs to understand where the balance is, adequate security while balancing out the customer convenience that you're trying to create.
Yeah, that speaks to it. Well, with the digital platform. Go ahead.
May I just add to that? Thanks so much, Razak. I would just want to mention a recent interaction I had with the regulators, where they asked me my opinion regarding, market happenings in this space. And, the first thing I said to them was, look, if there was no demand for these products, they would not exist and they would fizzle out.
Yeah.
So there is significant demand, and that's why you're having the rise of so many of this. what the regulators ought to do is to have this conversation. We've got to sit down together and say, look, we can't avoid this. It's going to continue to happen. How do we ensure that we bring everybody into the ecosystem in such a way that, we will serve the customers, or that's our investors, protect them, as well as ensure that the industry continues to thrive. And I believe that from the engagements we've had, there are so many things that are coming up. I mean, SEC is pretty open to a lot of new adjustments, to its function, as well as even issues around, talking to those who are not yet licensed to say, look, come in, get a license, let's engage, let's know how to get this market going. And I believe that with such working together, we can develop this market better. Yeah, so just as a form of addition.
Yeah, thanks.
Thank you very much for that, Tony. That was quite insightful. And still bordering around the question of security, diversification, and all on investment, right? So I'd like to ask, right? Digital platform have brought convenience, no doubt about that, right? They offer easy access to global investment markets and assets that we don't have in traditional asset class, right? So I would like to know, how does FSDH asset management today ensure diversification and risk management for its own clients? How do we ensure they don't miss out on this new bubble?
Seems you're muted.
Can anyone hear Tony?
No, I think he's muted.
Okay, I'm sorry. I'm sorry. I didn't realize that gone.
You're good to go now.
So yeah, so traditionally as a fund manager, there are certain risk management, that is, incorporated in your operations. So generally, you've got, asset diversification and the rest of them, asset allocation and the rest of them. To start with, you've got to have some level of risk acceptance criteria for your investments. You've got to look at the kind of risk that the customer is willing to take, or the personas, as Razak had mentioned earlier. When you actually design those personas, you actually look at the risk tolerance that applies to such before you even start to look at this kind of transactions. And then you continue to look at products that kind of protect the customers. So we use asset allocation to diversify our risks, and ensure that we don't have too much concentration and the rest of them. And then we spread the risk across several different kinds of assets. For instance, so you look at the mutual funds, we have certain mutual funds that are, for instance, let's say a balanced fund. So we sell those kind of products for people who do not wish to take undue risks. We sell some, who are perhaps younger based on their profile, to say, look, we're younger, we're willing to take more risk. And generally, in diversification, we just look at, the kind of assets that we'll invest in, ensure that they are rated, and the companies are companies with good track record, for instance. And then, before we expose our clients to such levels of risk, and we want to ensure that risk management is entrenched in everything that customers do, that our investment partners and the rest of the industry does. And I believe that as far as fund managers are concerned, diversification is something that the regulators take very seriously, to ensure that you plan for liquidity, you plan for safety, risk-adjusted returns. So you spread your investment across assets. Fixed income, equities, mutual funds, money market, the real estate, even digital currencies that we're talking about. Generally, to ensure that you're fully diversified and reduce risk significantly. Yes. So that's That's what I have for you. Thank you.
That's quite comforting to hear, Tony. So meaning at any point in time, there's enough diversification that in the uneventual issue of a risk, a foreseen risk should happen, the product is structured in such a way that it can absorb this, and the investor is not totally exposed. That's quite wonderful, right? So back to you, Razak, right? We are in the era of AI and automation, everything. Hey Siri, do this. Hey Google, do that, right? So how much change are we to expect in the digital investment space, given the rise of artificial intelligence? How should investors maintain a balance of automation and human effort in managing their investment portfolio?
Yeah, okay. I think there are a couple of areas where, the practical application of these new technologies come to mind. The first will be in the core area of portfolio management itself. For example, in portfolio rebalancing, when it comes to a diversified portfolio, how do you rebalance that? Is it manual or can it be automated? To a very large extent, most of those things can be automated, and they have been automated such that customers don't have to continuously interact with a human relationship manager for such to happen. And it also reduces the possibility of error when this is done, really well, when the automation process is done really well. So portfolio rebalancing is one key area that is extremely necessary when it comes to the application of these new technologies in portfolio management. The second is something that looks very obvious, but extremely important when it comes to the issue of money, and that is customer relationship, right? The key thing that application of digital to wealth management enables, as I mentioned earlier, is inclusion. We're able to reach out to lots of people, millions of people. And there is no way it will be practically possible to expect each person to be attended to by human agents. It's extremely impossible to expect that to happen, which means there has to be capacity being built internally in terms of the technology to enable customization of experience to each customer. So if a customer comes in to say, I have the point that the fact that you're using a digital platform doesn't mean customers won't have challenges or problems. There will be challenges, there will be issues, but how those issues get resolved is what really matters, right? So if you have, say, for example, as I mentioned earlier, 50% of our inbounds are handled directly by automated bots, for example, that doesn't mean we do not value the customers. It only means that some of the queries might just be something as simple as, how can I do X, right? When you say, how can I do X, and there is a clear process of how to do X, customers get instant response, instant solution, instead of waiting for human agents responding to them in a couple of hours. And that is one key area that application of maybe AI in its advanced or in its elementary form can be applied, because it can actually go really, really deep. And this is also very key, because when it comes to online investments or digital platform, the issue of trust is very key. People might not have seen you in the past. All they've known is your brand. All they've seen is interaction with your app, with your digital platform. And responding to them adequately actually helps to build that trust, to solidify it over time. So the two key areas that I can mention right now is in terms of portfolio management itself, like portfolio rebalancing. That is very key. When the portfolio drifts outside what is agreed in terms of target portfolio composition, can the system automatically rebalance the portfolio to rebuild it to mirror the risk return profile agreed with the customers? Then the second part is the customer service, which is extremely key. And frankly, I think that is probably the most important applicable area, given the scale that investment platforms that are digital are aiming for.
Thank you very much for that, Razak. I hear that. So in finding a way to balance understanding your customer and balancing which approach works best for them, the 50% are automated and the other 50 that still gets the human touch. So I see AI is not taking over the world anytime soon. So that's tough for you to know.
Maybe not yet.
Not yet, right? So to Toyin, right, as the CEO of a legacy asset management firm, right, what insights can you provide about the future of investment services? Do we see that successful union between digital and the traditional or legacy asset management, or do you foresee where we still have that gap where we use the traditional methods to attend or to serve some of the legacy customers while we try to bring others to digital?
Yeah. Okay. So thank you, Said. I think in looking at the market, one of the things that I personally am a stickler for is that of collaboration. To start with, I mean, we mentioned collaboration so many times here, and the reason is because if you are slow, you may be extremely thorough. If you're fast, you may not be as thorough, but you go faster, right? So the idea is to try to find a balance, and I think you find that balance in collaboration. I think, and also if you have good quality products, you want those products to get into the market faster. You want the turnaround to be faster. You want customer engagement to be quicker and solutions provided quicker. So basically what I'm trying to say is that, while we may seem to be independent, I think for the sake of the market and for the sake of growing a bigger, financially deep and sound investment ecosystem, I think that we must collaborate one way or the other. We must work together, whether under the collaboration or agreements or some measures, or the rest of them, in order to drive to get the best out of this market. I mean, like, just to give an idea, I think we already mentioned it in this conversation. 40% of adults in Nigeria are not even, financially included. That's a huge number. Then we are saying that, okay, if you're just looking at the size of the digital investments market, we're saying that the size is expected to be about $3 billion US as at the end of this year, 2023. And this is expected to grow between 2023 and 2027 at the compounded annual growth rate of about 17.6%. So the market is huge. We are still scratching the surface, and it's important that to create or to make things move faster and to get the market to be protected and to offer better services that include our customers. I think the best thing is for us to work together rather than create a bloody ocean of competition. We must bake a larger cake, right? And expand our reach, financial inclusion, product development, building sustainable connections with our customers. I believe that is the way to go. And the opportunities are so immense. I mean, we're talking about helping technology, helping to do fund management and then rebalancing of portfolios. I mean, there are machine learning opportunities, where a customer can actually, a computer or technology can actually let a customer realize that, look, the way you're going is not particularly sound. Based on research, this is where we believe you should be going. There's a robo advisory, which though I mean it's not particularly new. But then in Nigeria, it's not like it's a practice that has gained ground. But just 2 days ago, I was listening to AI developed robo advisor, who will just talk to you about, okay, so what are you trying to achieve, and reel out all necessary information. And just a large to put a cap on it, really, McKinsey suggests that about 11 countries in Africa, which has the which consists of 70% of Africa's GDP. That is where digital investment is going to be prevalent in Africa, and Nigeria is one of them. And we are barely scratching the surface. The earlier we address this in a collaborative effort, the more we're able to develop products that are sustainable. And if you know very well, FSDH asset management is known for developing some of the products that endured over the long term. So what I'm trying to say is that, look, we'll sit down together, leverage each other's strengths, collaborate, and deliver to the customers, to the general investors, wherever they are, at a quick turnaround, and get the market to be better for it. So thank you.
Thank you. Thank you so much, Toyin. I hear partnership and collaboration. As much as I'm having a lot of fun, I don't want to hold the stage to myself. I've seen tons of questions by our listeners, and I want to give Ore opportunity to tackle one or two before we go. So, Mr. Toyin, as a parting shot, what is your golden advice for young people? I mean, even established investors. So what is your golden advice to them, especially as they engage in investment in this digital era? What do you have for them?
Sorry. Okay, I'll keep muting myself. All right. So yeah. So just to say that, you know, whoever you are, wherever you are, one thing is sure: you're not too old, you're not too young to start to invest. Let's make that clear. Then first, you've got to start from what you have presently, and then, you know, do an assessment of that situation. What are your goals? You can have several goals, right? But look at your goals. What's your risk appetite, right? And then what kind of horizon are you looking at based on the goals? For instance, a young man who's just finished school, you know, perhaps that's your position, and you just got this job, you know, and you want to buy a car, you want to get, you know, property, you want to get a rental, you know, so you want to save up to get some assets, right? That helps to achieve, you know, get your work going, right? So you can actually take a look at that and say, look, that is the short-term goal. You have long-term goals or mid-term goals. You know, perhaps you're planning to get married, perhaps you want to buy a property, perhaps you want, so you start to look at those as mid-term goals, and then retirement and then in the long run, yes, and then mid-term also you have children, you want to raise children, you want to send them to school, perhaps, you know, the way Nigerians are, everybody's children are, you know, everybody's trying to send their children abroad. So generally you look at those goals, and then, you know, what's your risk capital, the investment horizon for each goal that you have, and then you start to make a plan to say, okay, based on what I earn now, you know, how do I achieve these goals? And then you work with it. And then after you've made the plan, it's important, or rather before you even make the plan, you need to work with a professional. It's always important to work with a professional, you know, financial advisor who will, you know, put these things in proper perspective for you and helps you to work back to say that if you're going to achieve this, this goal of maybe sending your children to school, you know, this is how you must plan, this is how much you must put aside. You have to establish what amounts those are, right? So that in itself, it's a beginning. Then there's a concept that I think that a lot of people should know, and that is the concept of, you know, systematic investment plan. You know, whether your plan is, you know, long-term retirement plan, or it's savings towards buying a property, or even children's school fees. You know, the concept of compounding interest, which is what is applied in this systematic investment plan, is, you know, you put money aside consistently for a long period of time, and you'll be amazed how much returns you get. It's called the eighth wonder of the world. You know, that is compounding interest. And I can give an example of somebody who's putting aside 20,000. So have an initial investment of 20,000 naira, and on a monthly basis, you add to it 20,000 as an investment for 20 years. At the end of the day, you would have invested a total of 4.8 million naira. However, interest calculations at 10%. Interest calculation at 10%. will be at 9.8 million. So in 20 years, you're going to cash out about 14 million naira. And you're investing 20,000 naira on a monthly basis. Now, if you do that for 25 years, you're going to get 25 million naira, which is 6 million total contribution, and 19 million, I beg your pardon, 19 million interest. So the fact that, I mean, that's of course, we're removing the issue of inflation and exchange rate devaluation and the rest of that from that. But the truth is, 20,000 naira on a monthly basis is good. It gives you this great opportunity to have a lump sum at the end of the wait period. So basically, what you need is to start from where you are, get a financial advisor to take you through the entire process, and then you can achieve your goal. Of course, we can achieve that also by leveraging certain technology to help you to achieve that. So thank you. That's what I have to say.
Thank you very much. That was so powerful. I heard you're not too young or too old to start. Start with what you have. Just start. And the wonderful magic called compound interest is all I could say is, all right, take all my money, please. You know where to see me. Come and take all my money. I'm ready to start. Thank you so much for that, Mr. Toyi. And as a parting shot to Razak, right? So we've been told that young people have a lot of disposable income. Gen Z, or they petition us in the corridor of power to say they now want to be addressed as young and getting it, right?
Yagi.
Yagi, young and getting it. So how should young people on this call approach conversations around money, either be it spending, investing, and all that?
Well, I'm not sure about young people having a lot of money. I think the economic power of young people is rising, no doubt about that, and it will continue to rise. But right now, I think a significant proportion of existing wealth is still being held by a relatively older generation. And that's what the data is saying, right? But again, as with anything, the point in time is not what matters. What matters is over time, right? So young people will continuously get wealthier, no doubt. I think for me, one key thing that they need to take advantage of, especially given that the economy will be, transferred to them. They will be making economic decisions at corporate level. They'll be making political decisions in the next few years. They'll be making, global decisions. I think one key thing that matters at this point is being able to understand what investment is, learning about investments, learning about financial education. Unfortunately, this thing is not being taught while in school. It's something you have to show deliberate efforts to learn. And I think if you're able to do that, you understand why time is your greatest ally now. Because if you're in your 20s or in your 30s, one key thing that you have that a 60-year-old or 70-year-old doesn't have is time. And they can't buy it. So you have it for free. And the earlier you start investing or saving, the better for you. Just like Mr. Toyi mentioned earlier, compound return can be phenomenal, especially if you understand. In fact, it's one of those things that it is very difficult to understand if you're just trying to use your brain you can't understand it if you're using your brain to do that. You need to put it down in Naira and Kobo to actually appreciate how interesting it is. So learn financial education, build your financial education muscle, and recognize that what you have right now that most people don't have is time, and take advantage of that by investing early. Thanks so much.
I love it. I love it. This is a really, really great way to end this panel session, right? What you have as a young person is time. And then using the power of compound interest, ensure that you have a plan for your investments and take investments seriously. So I know we don't have any more, not so much time left. So we're just going to answer. We're going to send in the I'm going to read out the questions that people have. We're just going to go through if you don't have, if maybe your question was not read out, maybe we would send it to them personally so that we can answer it. But just to get some of the questions that we have from the audience, and if you do have questions, you can still put it in the chat box. Okay, so we have this question from Yemisi Ayeni, and she says, so it seems that digital platforms, I'm guessing this is for Sir Razak. It says it seems that digital platforms are currently giving access to traditionally or to trade digitally in traditional assets. So why would an investor use a digital platform to invest, e.g. a mutual fund, when it is possible to invest directly in the mutual fund via a asset manager's online system? That's a very deep question. Okay.
Well, it's not that deep, actually. But it's a brilliant question. Right, it's a brilliant question. So I think the most important thing to look at here is that the market is quite big, and to a very large extent, what most digital investment platforms do goes beyond just the aggregation. So they also have internally managed funds, especially those that are regulated by the SEC, like ROI. So we also have an internally managed funds that are made available to users. I think the most important thing here is to ensure that we have increasingly large number of people having access to the investments. As I mentioned earlier, the underlying assets are not changing. Stocks will continue to be stock, right? Fixed income will continue to be fixed income. But again, we've had recent developments around new digital assets like, say, crypto. But as I mentioned, the jury is still out there. And for those who want to have huge exposure to crypto, you just need to recognize the risk you're carrying, right? Because for so many other industry players, there is a place of compliance. There is a place of ensuring that you're actually doing what is regulatorily allowed, right? And for players that are regulated, regulation has its advantages. It can be seen as, dragging you back. And I was looking at the question someone asked earlier that companies have taken people's money. If that company is regulated, for example, by the SEC, you have the right channel to lodge a complaint, right? And the SEC will actually take the necessary step. We've seen instances where companies that have demonstrated bad intents, the directors, the players have been sanctioned appropriately in order to prevent such bad behaviors from happening. But if you patronize an industry player that is not regulated and the person cuts away your money, the person goes away to another country, it's actually very difficult for you to trace. It's actually very difficult for you to lodge a complaint. Of course, you can lodge complaint to, say, an EFCC or so, but having a regulator in place can actually prevent that from happening in the first place. Right. I'm not saying it will reduce it to zero, but it will reduce the probability of that happening in the first place. And that is why it is extremely important that as we patronize any digital platform, we should also try and understand whether that digital platform is actually regulated, whether it has a license to operate and do what it claims it does. So just look at it that the market's opportunity is being widened beyond what currently exists, right? Some statistics are there. If you look at the number of people, for example, who are bank customers, it's quite amazing. Like if you are to even use the BVN numbers alone, that's about 50 million. How many of these people are actually investing in Nigeria today? It's just a fraction of it, which means beyond even without focusing on the 40% that are not banked at all, those that have been banked, how many of them are investing? Most people just have bank accounts and all they do is just put in money and take it out, which means that the wealth management industry still has a long way to go to catch up with what the banks have even achieved, even though the banks have not even achieved a lot more, right? So it goes beyond competition right now. It's about how do we deepen the penetration? How do we broaden the market? How do we reach out to a lot more people that are currently not captured within the market opportunity?
Awesome. That is actually very, very, I think then is the answer that is really deep. Okay, so someone wants to go into economics, and I think that's Ayodeji Akinso. He's asking, what is the right portfolio for high income earners that will give capital growth? I think I'm going to give that question over to Mr. Toy.
Okay. Well, so I think to start with, the class that she talked about, what high income, and I think what we need to do is first to establish what are the goals. It's important to know what the person's goals are. Yes, you earn quite a sizable income, yes, but you've got your investment has to have a goal to start with, and then we work back from there. And then what kind of horizon are you looking at? I think those are the fundamental questions. So it would have been easier to address if, for instance, said, oh, a high net worth individual high income earner who is maybe 20 or 25 or 30 and is looking and is looking to put some money aside for retirement, or is looking to send 3 or 4 children to university in the United Kingdom or the United States, or I just want to buy a house. So generally it will be easier to do. However, I have just to say that, look, the most important thing is, what's your risk appetite, what's your investment horizon, and then and the goals. Once we put that together, we can actually say to you what we can give you the direction. So we can say, like, if you're young, you can actually put your money away into the stock market for a long view, fixed income securities, the FGN bonds or the other bonds, and decide if you have children you want to send to school abroad, we can find some dollar-denominated investments for you to look at, so that you can, when your child is about to get into university, there's and we look at your liquidity as well. So there's a liquidity that should drop just about the time to coincide with when maybe one of the 4 children will be going to university, to help with the tuition and the rest of it, and then plan so the liquidity, the goals, the investment horizon, the risk appetite, all form a big chunk of the decision that is going to be taken. And we can now play with asset allocation and maturity of the assets as they come in. So thanks.
Thank you. All right, so just try to go rapid fire now. So someone said, I have a great concern. Okay, I think it was Adewale showing me. He said, I have a great concern for online or digital investment platforms. This is going to Mr. Razak. It says, because, okay, outfits namely bound for me. I think you've pretty much answered this. We registered under CAC. Okay, they were also regulated, even insured with one of the best insurance companies. The companies collected money from investors and then they went under, and nothing has been done by the regulators or any agency of the government to bring these people behind this scam to book. So what actions can investors take in this regard?
Hello, can you hear me?
We can hear you now.
Yeah. So I think I'll address this from 2 angles. One, I think there is a strong place for financial education first, because sometimes some of these investments are very clear that these things are not sustainable, but unfortunately, the human side of us usually take the better of it, and people just pour in money just because they are chasing returns. I'm sorry, I'm not saying you are, but that's what we've seen in the market. A lot of people ask for unrealistic returns, and then what do you get? You get a response from unregulated players who promise heaven and hearts, and then they get the money and misappropriate it. And we've seen that happen several times. And I think the first condition you need to understand is, if you're investing in anything, please check properly. Is this company regulated at all? Anything investment it's a heavily regulated industry, right? Just check. CAC, as I mentioned in the comment, is not a regulator. Anyone can register a company with CAC. If you're selling meat, you can register a company. Anything, any economic activities can be registered with CAC. It doesn't mean CAC is the regulator, right? So different sector, different verticals of the investment, different vertical of the financial service industry has different regulators. For investment, it is SEC. For banking, it is CBN. For insurance, it is NICOM. So you need to understand which regulates. For example, if someone comes to you and say they're offering pension or something, you need to understand if they're actually licensed to do that before before you part your future to an unregulated entity. And I'm sorry to say this, but I think it's something that needs to be said. Most of the companies you listed there, I think from day one, it was very, very clear for those who are financially savvy that these things were primarily Ponzi. But unfortunately, a lot of people fell victim of it, primarily because they were chasing returns. So first order condition, check if the company is regulated by the CAC. If they now disappear with the money, I think you have somewhere to lodge that complaint to. You can't lodge this complaint to CAC. CAC won't do nothing. CAC is not a regulator. In fact, in their MEMA, they might not even put it there, they are doing investments, right? So I think that's one thing I'll just say there, for example. Check if the company is regulated, check the founders, check the operator.
Yeah.
Be very, very sure you do your primary due diligence before you part your money on there. There are lots of regulated entities that are doing incredible work. So please be informed about it before you fall victim again. If at all you fell victim, yeah. Sorry about that. Anyway.
All right. Okay. So a big sorry to the person who asked this question. So we're gonna have just two last questions for both Tony and Mr. Razak, and we'll end the Q&A session. Okay, the first one to Mr. Tony will be, what is FSDH doing to be attractive and known by Gen Zs? Because in my opinion, FSDH is an elephant, or is going into an elephant, or is growing and is not as nimble as it should be. So what is FSDH doing to address this?
Well, thank you for that question. Yes, it's not completely unexpected, but then to be quite fruitful, because quite honest, FSDH has been around for quite a while, and I believe that yes, we appear to be very conservative and still doing things in the old ways. But in the recent times, we have turned a few things around. We have had discussions with digital platform providers like Cowrywise and a few others, and we've kind of revamped our processes. We've added we've increased our employees. We've hired young, dynamic individuals who have certain experience in the area, and we've recently launched FSDH app. The investment app is the launch. So generally, I want to say that yes, we are not as old as we look. We are yes, we may have some gray hair, but then there's a youthful part of us. So we have quite a number of young individuals who are doing new things, and we are really positioning. And you'll be hearing from us as we go retail. So our retail strategy has kicked in. And the first step of that was the launch of the FSDH Asset Management mobile app. And then, just stay tuned, and you will see the youth in us. So you will see us doing a little bit of breakdancing at the street corners. And then, so you can be sure that, yes, we've still got some oil in the bones. So thank you very much.
Thank you. All right, for that answer. All right. So Mr. Razak, this is definitely the last question. And it's simply, okay, I see, okay, what role are digital platforms putting in place to ensure backward investment opportunities? I like this question. So he says, by example, currently a man in EU is able to invest in Apple shares via these platforms, but can a man in California invest in Dangote shares?
Awesome.
Yeah.
Awesome. Brilliant question. Brilliant question. By the way, to just add to the response you made earlier, Tony, I think the age should count for something, and I'm sure it's counting for something.
Of course. But he has discounted that by telling us that yes, so yes, that is true. Thank you.
Yeah. So this question is not something that the digital investment platforms can actually handle alone. There are lots of macro backgrounds to that, right? The attractiveness of the country, the attractiveness of the investment you're offering. The question we should ask is, why does the man in Uyo want to invest in Apple, for example? What does Apple provide that makes the man in Uyo feel attracted to investing in Apple? So there are so many macro backdrops that drive that interest, that drive that demand. And you can't control your macro. There are so many other factors responsible for the macro conditions, inflations, FX, and so on and so forth. Why you are investing in Apple is primarily one of the reasons that most people give, well, which is financially sound, is, protection of capital against, devaluation, for example. So why will demand from California wants to bring money to Nigeria if Naira will continuously get devalued, right? So that's the macro question that you don't have control over. That is just by the way. But of course, I'm sure Mr. Twain can, lend credence to these as well. In the past, the domestic markets in Nigeria used to be driven by foreign investors, right? Like significant proportion of the activities happening was driven by foreign investors, 60, 70%. The point is, what happened to those foreign investors? They were coming here to chase alpha. They were coming here to invest in the banks. They're coming here to invest in the likes of Dangote. They're coming here to invest in the likes of BBC, then before Dangote bought it. They were coming here to invest in the economic potential of the country. What happened? What changed? The macroeconomy became bleak. And when that happens, the only thing is people will run away. So I think the expectation is that as we have improved macro conditions, I think capital investments, global, as I mentioned in my presentation earlier, capital mobility is something that is getting stronger by the day across the world. What you need to do as a country is just to position your country as the desired capital destination, and capital will come. Right now, where we are today as a country, Nigeria is not a desirable capital destination. We just need to be very frank with ourselves. But when that changes, then there will be a lot of, and it's also reflected in foreign remittances that we're seeing, not to even talk about investment, just people that are not expecting the money back, but they just want to send them money. We've seen how reduced that has become. So for that to change, it goes beyond what we can control, frankly. It's macro questions that need to be answered by the economic managers across board. I hope that helps in some ways. I hope that didn't disappoint you in terms of giving you a direct answer, but the truth is what it is.
The truth is what it is.
Sorry, may I just add to that? So that we have. So I think Razak's done fantastic in terms of response to that. However, I want you to watch that space. FSDH has a product now that we're just waiting to get regulatory approval. Anybody who anywhere in the world wishes to invest in Nigeria will be able to do so. So let's just keep that space in there in view. I guarantee you that such an opportunity is going to come up, very soon too, right? So what you have mentioned is a desire that every Nigerian should have, and I think the more we address our issues, of security, of balance of payments, of supply of foreign currency, and the urge for speculators to continue to keep their money in foreign currency, the better it is for us as a country. And I think that we can only be optimistic as we try our best to ensure that we stay afloat, both at the individual or at the corporate level. So thank you very much for that.
Thank you to our panel. Members, I thank you because the insights that we've gotten here, I'm pretty sure that everybody has written some stuff down. There's nobody that hasn't learned something today. Somebody even said something into my DM, something very profound. Is our hashtag for today. CAC is not a regulator. Right. So even if even if it's a business, is it a regulated investment, business? So CAC is not the regulator, SEC is the regulator. So let's make sure that we keep it clean. Right. So we're moving into the final part. We're just going to have Said come back up to give us some closing remarks. I'm pretty sure that there's already information overload. We've had a lot of information. We need to go and ingest and write some things down and plan out our investment horizons, right? So he's just going to close for us with some closing remarks, and then we'll move into virtual photos. So please don't leave just because I want you to be online. I want you to let's be sure that everybody knows that you are here, right? That you're learning and you're moving forward in this investment space. So he's going to go ahead and speak for a few minutes, and then we'll take virtual photos. So please don't leave. Thank you.
Thank you very much, Ore. Just to write off the back of the audience that said we're actually old, nimble. What are we doing to identify with them? And I'm surprised you didn't bring out the mobile app card. We've got digital, right? We've decided to embrace to speak their language, right? So I mean, just imagine a world where investing is not just simplified, but also personalized, insightful and convenient. That is the approach we took to digitizing the legacy asset management, right? So what we want to do is we've designed a companion, a financial companion for you, to lead you into your journey of prosperity. But hey, don't just take my word for it. Get downloading and take it for a spin. So what we built together on the mobile app is to grant you investment freedom, ease of redemption, like your money at your fingertip, then educational empowerment. Like Razak said, you need to educate them. A lot of people have the means, they have the money, but they're soon parted because of, So we decided to imbue that into the app, and also seamless support, which is you need to reach me at any time. There's a column or there's a feature for you to click, and of course you have me. I have dedicated customer experience officers. They're there to answer all questions. So we've gone beyond the traditional 9 to 5 Monday to Friday. We're just in your face because, like I said, we're your companion on your journey. So I look forward to everyone downloading, taking it for a spin. We welcome feedback. As we get your feedback, the features you want, we iterate and continue building. So that off the way, I just want to say I've learned a lot today, greatly. Right? What Toyin said was actually very profound. It's not too late or too early to start, and the best time to start it now is now. Start with what you have. And Razak also spoke on convenience. The need for you as a user not to put the whole responsibility on your digital platform, but also to come in to do that due diligence as a user, to know where you're investing your money. And I say, all right, we need to do this more often, because me as a moderator, I've learned a lot. I'm just itchy for you to come take my money. Let me experience some of the magic of compounding interest. So on that note, I say, Tony, Razak, I know you guys have a lot of your plate. Thank you for taking time out of your busy schedule to give us this wonderful nugget. It's so insightful. And to the BMC team, I say a wonderful job. Let's do this sometime soon. Thank you very much.
All right, that's a good way to end. That's a good way to end. I know when we took the poll earlier on, can you wait a bit for playing the video? When we took the poll, let me just wait for that. Okay. Okay, so I think you can put it on, first of all, before you virtual photos, just put it where the QR code is. right? I know when we took the poll earlier on, there were some people that were like, oh, I don't have any investment app on my phone. This is your opportunity. Don't waste it. Don't waste it. Somebody's giving you a chance to be a cool kid. Please just scan to download. All you have to do is go to your camera and scan the FSDH app, right? We'll continue the conversation online. If you don't know anything about it, scan it first, right? So just scan the app. Don't waste this opportunity. And tell us, give us feedback. We love feedback. We love feedback. All right. So moving on, we're moving to virtual photos. I know some people, are working from home and they are wearing their suits with their shorts. You can make sure that your suit is beside lighting because we're taking virtual photos. So just put on your camera. Don't omit yourself. Just put on your camera. Let's take some virtual photos, please. Please, let's take some virtual photos. Let's see you. Let's see your smile. Let's see all the people that joined, that had fun with us, all the people that were chatting. They were chatting warriors. Razak, please join us. All the chatting warriors, please. Let's see your face. Let's see if we want to look at you. We want to see you. We want to view you. Okay, so that we can take a virtual photo. So I want multiple people in BMC to please help me take this picture, right? I know there are more people online. I need more videos. I need more videos. I need to see more videos. I know you're working from home or you're wearing scarf. Your wig is not on. Brush it and wear it. We'll give you 2 minutes. Right? Right. You've not had your bath. It's fine. Just clean your face, put white powder. It's fine. All right. Yes, I want you to make it to social media. It's a shareable moment, right? All right. So thank you so much. So and then we'll pose in a particular way, like at a particular moment, so that we're all smiling. Put your best foot, please. Let me put this is my good angle. This is my good side. All right. Okay. So in 5, I'm going to count down. 4. Yes, put your angle of your camera very well. Thank you. In 3, in 2, in 1. Yes, Liko, I hope you're taking the pictures. Okay, so please just keep smiling. I'll tell you when to stop. Yes, yes. Okay, I see some beautiful smiles. All right. I think we have enough pictures. Okay, thank you so much for attending. Okay, it seems okay. Thank you so much for attending the FSDH Asset Management Investment Webinar, Investment Week. Thank you for being a part of it. For staying to the very end.
Thank you,
Foreign and economics,
Olua.
right?
Yeah.
Thank you. I can see. Yeah, you can put emojis in the chat box. Let's see that you were here. If you've not said anything at all, let's see your emojis in the chat box, right? Thank you so much. We appreciate you. We appreciate you. We had so much fun. Yeah, I can see you.
Why are you
Okay.
wearing Komoro?
Yes, I saw all your chats. Thank you so much. We appreciate you. Yeah. Yes. Yes. We'll keep doing more like this, more things.
Why are you
like
wearing
this.
Komoro? Yeah, I will sue you.
We'll be having more events like this, more chances for us to, connect and learn really about investments. Yeah. Okay. So on this note, have a wonderful day. Have a wonderful day. Just go back into your day, contemplating all these things, but make sure you write things down.
And you too.
And you use your plans and actually invest, taking action. All right. It's been real. My name is Oroluwa Oni again, if you didn't see it. And this was FSD Asset Management Investment Webinar. Thank you.
Thank you.
All right, bye. We can all say bye.
Obrigado. Merci beaucoup.
Ciao. I love that. Obrigado.
Karibu sana.
Another language. Teach me.
That's Swahili.